Danimer Sciences shares down 8% this morning following a short report from Spruce Point, run of course by Mr. Ben Axler. Coming back to our show after a pretty victorious takedown last time, Ben, of the companies that you brought to our attention. So we're going to keep coming to you here. The shares are trading at 23 bucks. They closed around 25 last night, but the stock that SPAC'd earlier this year has already lost a ton from its highs. So how much more does this thing have to go?
Well, thanks again for having me, Oliver. How much can it go? It can go down 100%. I mean, this is a business that's never, to the best of our knowledge, demonstrated it can turn a profit. And so it's dependent on new capital to sustain the growth story. It's currently not making money. The company put out an investor presentation announcing the deal in October. Since then, its main feedstock, which is canola oil used to make the PHAs, has gone up 30%. And this isn't a short-term increase in canola oil. There's a structural deficit such that long-term manufacturers are adding capacity. So when your main input cost goes up 30% and you don't have much pricing power because you sell a generic commodity product, you have 100% downside risk.
So, Ben, when I look at this company, they've got a lot of what seems to be very high-tech either salesmanship or real tech. I mean, polymers and new plastics that they say are going to have all these new types of implementations and uses. Is this a statement about the market being, not as big as they say? Is this a statement about to the pricing power, them not having any? Because that seems kind of more connected to like a macro sector theme, or are there things specifically with the management or other aspects that you look at?
Well, there's a lot of problems with the management. Number one, we outlined that the CEO came from Armor Holdings. There was a scandal there. The CEO prior to him fabricated his biography, got into a messy counter lawsuit with the company where he alleged securities fraud, misrepresentation. The company's pulled down a lot of the historical press releases that give investors an inkling of what went on. We found a lot of misstatements and things that aren't adding up. So yeah, we have a lot of issues with the management, particularly the chief technology officer here. They've obscured that he's had 3 different biographies in the past. The company's had multiple websites all taken down. But there's a real question: did he attend MIT or not? His prior biography says he did. Now it says he doesn't. So there's some credibility issues here. But on the topic of the product, look, they make a product that biodegrades. It's sort of a substitute plastics, but this is not new technology. I mean, they acquired these patents from Procter & Gamble, and have yet to demonstrate that there's a big enough market and that they can produce this stuff at commercial scale. I mean, they're out there touting partnerships with Pepsi and Nestle, and that's great. But for them to want to get comfort to buy mass products, they're going to have to bring down the operating cost. Okay, the product is not cost competitive with a traditional straw. And they're going to have to explain how they're going to get adequate canola oil supplies to meet their long-term demand. And more importantly, they're going to have to prove that they can produce this at scale on good quality. If you're Pepsi, you're not going to make a long-term commitment to this company unless you can be assured that this ingredient is going to be consistent in millions and millions of bottles a year. So all this is a trust me story. It's a trust me story from a management that we've shown has somewhat of a sordid past, and the financial projections are way too high, and they're going to disappoint.
So the company which makes its biodegradable polymer, PHA, as you mentioned, the role of canola seeds that are have this bacterium that basically they use for it. They say that this is, as you mentioned, patent protected, that it for them is proprietary. But in terms of sales right now, you're saying that they're not going to be able to live up to sales growth, or that they don't have sales right now to justify the business and keep it going as it is right now?
Well, I think you hit a great point. How can this company conceivably grow into its current valuation, which is $2 billion? Okay, they're losing money. They put out long-term projections. You have to haircut them because, again, we've shown that the assumptions that they put out with the canola oil just aren't reasonable. So if you assume that they can hit, even assume they hit their target of $169 million of EBITDA in 2025, you put a reasonable multiple for what a chemical or specialty chemical manufacturer is. You discount that back. You include 115 million of shares. You can't forget there's millions of warrants that are outstanding here. we still get 50% downside just for the company to hit its own target. Now, our numbers are obviously more pessimistic. We think there's 65% downside, and we think there's 100% downside if they burn through all the money and shareholders give up yet again.
Sales did climb like $4 million from the year prior in the last quarter, but they lost 26 cents. The analysts that were covering it were looking for a loss of about a cent. They lost more money, but does that sales increase mean anything?
It means nothing. I mean, again, $4 million sales increase to $2 billion valuation. It's off a small base. It's really meaningless. Again, this is a trust me story. You have to look at the long-term projections. You have to look at the management's track record of hitting prior projections. And again, they've obscured it from their website. We've dug through all of their press releases dating back, over 15 years. We find inconsistencies in production estimates, inconsistencies in size of their manufacturing facility. I mean, just take a step back. Look at the 10K. They say that their current manufacturing facility in Georgia has 200,000 square feet of real property. And go on the website and they say 280,000 square feet of manufacturing size. How can the manufacturing size be bigger than the property they own? The numbers just don't add up. The management has no credibility. I mean, this has to be sold severely, and I'm short, and we're staying short until this thing goes down dramatically.
Okay. All right. Last time we were here, ABML dropped about another 25% since you walked us through that one. And this one you say has got a long ways to go. We reached out to the company, no response yet. Ben, thanks for the rundown here of the report just out this morning. Thanks for the details as always. Ben Axler joining us from Spruce Point. He is short the stock.